Every time it rains, Bitcoins from heaven. Don't you know each cloud contains Bitcoins from heaven? You'll find your fortune falling all over town. Be sure that your umbrella is upside down. Trade them in for packages of sunshine and flowers. If you want the things you love, you must have showers. So when it starts to thunder, don't run under a tree. There'll be Bitcoins from heaven for you and me.
Hey, it's Soleil, and this is episode 437 of the Orange Pill Investor. Apparently, I take requests now, and so somebody sent me that one and thought it might be a good one for Bitcoin because we got some all-time highs to celebrate. If it wasn't going to be that one, it was going to be DMX going to give it to you. So, maybe next time. All right. So, it's going to be funny because Ben always likes to say he likes to see me squirm when my my covered calls go in the money, and I have to figure out how to weasel my way out of the situation. But it's kind of like when they told Hulk to get angry, and he's like, "That's my secret. I'm always angry." There's no way to get out of it, right? You enter into the contract, you're stuck with it. So I'll probably do a whole lot of nothing today, but even more important is probably I'm just going to take a little fucking victory lap because Bitcoin over the past year, right? I'm not cherry picking anything. I'm just going to the yearly chart. You can get lucky or unlucky on this, but it's up 103%. Anybody with the Bitcoin thesis that transferred that conviction to strategy over a year is up 210%. Makes sense. It's a leveraged Bitcoin play. We have sacrificed the sovereignty of the Bitcoin asset, and we have taken on third-party risk. We are saying that I'm willing to trust that that Saylor and team are going to responsibly acquire Bitcoin. And we'll take some extra risk, and we're going to expect an additional return. So if Bitcoin is the hurdle rate that all companies really have to trade themselves against or compare themselves to, as an investor, strategy is the hurdle rate. If I can't just beat plunking my money into straight strategy shares, then what the fuck am I doing? I might as well just buy strategy shares. So this is the 5K account. I'm just going to tab over to my returns in a year, which are 240%. So even in the 5K account, I haven't just outperformed Bitcoin, I outperformed strategy itself by 30%. This was done through a combination of running the wheel, selling cash secured puts until assigned, and then selling covered calls until called away. Once I got enough buying power to be able to afford a poor man's covered call, I was able to also invest in strategy in this small account because, where is it? I don't have the money in this account to buy $43,000 worth of strategy at 100 shares. So instead, I went out and bought, it wasn't even a Leaps because I probably couldn't afford a Leaps. So this wasn't, I'm not going to say that this wasn't without risk. This was very risky. But for someone willing to take the risk, it's possible to outperform not only Bitcoin, but the gold standard of investments. So it cost me $10,800 to buy this call, this 250 call. Now, there were some touch and go moments because I think I had probably rolled it at least once or twice by the time I got here. But there were some moments where I think this was probably a 300 strike at one point, and strategy was below 300. So my long call actually went in the money. So you can look and see. So since May, we've been doing okay. But back here, when I was trading in February, March, April, there were some touch and go moments like, is strategy going to hold on to 250 or is it going to break down to 200? So this got a little dicey at times, and you can see that I had turned this $5,000. I started trading it at the highs, and it's off the screen now. But if I go to approximately after March 2024, you can March 2024. Yeah, right about here is where I started the challenge with $5,000. And you can see within a month of starting the challenge, I'd actually turned it into like $3,000. And then later, it was up to, at its peak in November, it was up to like 32, 33. And since then, I turned 33 into 8, 9, and 8.6 again. So there were 3 times where, I had turned the 5K into 30 and then almost back into 5 again. So I don't know if that's a victory lap or not, but the whole point is that I didn't panic sell here. Like, I had conviction in strategy and in the system itself, and kind of kept at it. And the reward is at right now. And really, I thought this was a perfect day to do it because I sold the 425 calls, right? And since strategy is at 431, this is the moment when I'm missing out on upside, right? I should have more money in this account than I do because I capped my upside at 425 and strategies at 431. Now, all of these December 1080s are printing. Not like amazing, but I bought them for 5. Now they're worth 7. So they're up, what, 40%? Yeah. So that's nice. And I could use that money to pay to roll if I have to. So I sold this covered call for 15. It's worth 31. If I have to pay that $1,600 to roll it, I can use 2 or 3 of these long calls to pay for it. These long calls have been my upside protection that I've been accumulating with all of the premiums that I've been collecting on the shorts. And you can even see that I've made some really bad calls, and it's still profitable, which I think kind of illustrates the power of lowering your cost basis by selling puts or by selling covered calls. If you reduce your cost basis by 0.5% a week, which is pretty doable on any Bitcoin derivative, like that's extremely conservative. After 200 weeks of that, whatever you bought would be completely free. You would have collected enough premium to make the cost basis of your shares $0. So at that point, you're just playing with house money, and it doesn't really matter what the price goes to. Collecting 1% a week, which is usually still not that hard on Bitcoin derivatives because they inherit Bitcoin's volatility. It only takes 100 weeks, 2 years, and you can have your stocks completely free. Now, there's almost a 0% chance that you would still be holding those stocks because they would have probably been assigned and called away and assigned and called away a dozen times in 2 years. But that's kind of the other half of the power of the strategy, because if you're selling 10% out of the money and they get called away, now you're making 1% on the premium and you're making an extra 10% on that position if it gets called away. And that's not going to happen every other week, making a 10% bonus return. But I don't know, a few times throughout the year, you'll end up with that extra bonus. And it doesn't feel like one, because when you get your shares called away, it's like, oh, damn, I might have missed out on 20% upside, 30% upside, 40%, whatever it is. But it generally just seems to work out in the end. Obviously, I've been doing this for 5 years. I haven't put this to like the 50-year back test. But, so far so good. And I didn't mean to show the 5K account first, but to do a little bit more bragging, let me just pull up. I took a screenshot on my phone. Early there this morning, my covered call challenge was beating the covered call ETFs by about 14 grand. And in percentage terms, I started it with, I think it was 215,990. So let's see, the covered call ETFs was 242, 179, 28 minus 215, 990, 90 divided by the original amount, 215, 990. I thought they did better than that earlier. I think I did the math wrong. No, that's about... Yeah, that's right. So it looks like the covered call ETFs made about 12%. Let me just double check. I thought they'd get a little more than that earlier. So 242, 179, 28 minus the starting value. Minus 215. Yeah, divided by 215,990. Yeah, okay, so the covered call ETFs are up 12% since January 23rd. And my account is at 256,890 minus the starting value divided by the starting value. So I'm up 18.9%. But I think even more impressive than that is that strategy was at 373 and strategy's at 428.27 minus 373. 55 divided by 373 on January 23rd. So in that time frame, strategy's up 14.8%, and my covered call strategy is up. What did I say it was? $18.9. So the covered call challenge account has also outperformed not only the covered call ETFs, but strategy itself. If I had plunked my $215,990 into strategy, I'd be up a little bit less than I am. And if anybody's been following these trades, I probably lit at least $50,000 on fire with the June and July 1080s. All of like 90% of those positions were just disintegrated. But you don't get takebacks. You don't get coulda, woulda, shouldas in the stock market. So even with those missteps, if you can call them missteps, right? Hindsight is 2020. So we didn't know that strategy was going to go down to 250 a bunch of times before roaring back to life. But I could have been smarter and gave myself more time to be right. Like the 180 days to expiration was not cutting it. So probably should have stuck to leaps. That might have worked out a little better. Now, if we factor in taxes, maybe I don't come out ahead. I'm not really sure, but ignoring taxes, like if this was in my IRA, you know, where taxes weren't a factor, this would absolutely be winning. And again, this is giving the buy and hold strategy the best chance to be right. Well, actually not necessarily. My 440s were safe today, I think. So in the covered call challenge, I had the 440 strikes. So these were never actually in the money, but it was damn close. So it's going to be a little bit hard because I haven't been tracking the main account. These 430s earlier this morning were actually flipped to in the money. So that's why I titled this one Taking It in the Shorts, because my short positions were underwater. So, yeah, my upside is limited, but since I'm outperforming buy and hold, so far so good. The pennies in front of a steamroller, critics can go fuck themselves, I guess, was really what I'm trying to say. Still remains to be seen, though. I might not be singing this tune in a month if I'm still holding on to these 430s and strategies trading at 530. we might be having a different conversation. So we'll see. But I did definitely have my fingers crossed, and I hope that happens. I hope I get to record this video in a month and have that to complain about. That would be that would be upside down $100 on 17, actually 18 covered calls. So that would be about 180 grand of upside missed. on these positions if we go to 530 in the next 30 days. So that will be fun. If I scroll out, yeah, we'll see. Will these long calls be enough to make up for the capped upside? Stay tuned to find out. All right, so that's all I got to say about that. Let's check the chats, and then maybe make a couple of trades. It is roll day. What's up, Emperor? Did you grab some sequence calls yesterday? Nah. I think I was headed to Costco or something around that time, or the gym actually. Oof. That is nice. That's kind of crazy though. What the hell was Sequins back in 2012? I guess it doesn't matter. They're doing what's happening? They're merging with Swan or something. I should probably know since I'm a Swan investor. It's hard to pay attention to these things. Thanks for confirming, Howard. Keith says, feels like we should have a Green Day song for the intro. Can we talk to the strategy of rolling up the strike on a long call to raise the money needed to roll up a short call? Example, the delta went from 0.8 to 0.95, maybe rolling back to a new strike at 0.8. Yeah, that's a perfect time to get into it because that's the exact thing that I'm going to be facing in this account. I've got this 250 call, right? And I'm selling the 425 against it. I've got $166 worth of buying power here. So I can't roll this short call because I don't have the money if I'm not rolling for a credit. But I should be able to roll up this strategy call to maybe the 300 to pay for it. So let's just see how that works, right? If I try to roll this position out to 45 days to expiration, let's stay close to the 425. So let's like, okay, I'm going to try to go up to the 430. It's like, I'd have to, I could only roll this up one strike, right? So if I tried to roll this up to something safer, like the 450, now I have to pay a debit. That's not going to work. So what I would have to do, and I could do this in order, or I could do them at the same time. I'll do it at the same time later. I'm thinking it'll let me. But I'd have to start with the long call. And actually, I should probably go back first. If you know what strike you want to roll up to, and you have to be careful about this too, though, because if you roll up your long call and then strategy pulls back to 375 or something, you're going to have taken profits in the long call. You'll have rolled this up to a safer strike, but then the long call is going to lose more if strategy pulls back to 375. So you have to be careful doing this, but in a smaller account, you kind of don't have a choice really. But let's just say, okay, let me plan for this. I want to roll to the 475. Let's just say. I'm like, okay, I want to give myself a little bit more breathing room. That's going to result in a $1,300 debit. So I need to take at least $1,300 worth of profits in the long call. So let's just bookmark that and keep that in the back of our minds. All right, so I bought this long call for $10,800. It's currently worth $18,000. And I've already forgotten how much we needed to collect. I think it was $1,300. So I also probably need to roll this out because by July 17th, this is going to be under 90 days to expiration. So I want to give myself a little bit of breathing room on the short strike, but I also need to roll this out so that it's not a rapidly decaying ice cube. So this is going to cost us to roll as well. So let's roll this out to January. And if I rolled it out to the exact same strike, that would actually cost me $1,000. So that ain't going to work. I need to get a $1,300 credit, not pay an extra $1,000. So to break even on this call is right about here at the 260, but I need another $1,300. So I need this to be cheaper than 170. So maybe the 300 strike. The 300 strike is the 84 delta, which is still pretty conservative for poor man's covered calls. It's still on the dangerous side because this is not a leaps. This is not greater than 365 days. And I doubt I could afford it without going to June 18th is close enough to 365 days. But let's just see how much the 300 strike would cost me. That is cutting it close, but it's like almost there. And what's the delta on this? 81. So I could probably go here. Yeah, I could roll this all the way out to June, give myself a bunch more time on this option. A nice juicy delta, 80 delta. I think that's exactly what you mentioned. New strike at 80. Yeah. And then this would give me the buying power I need to roll that short strike out. So I would do this position first and then the other one. And I wonder if I should just go ahead and do it. I wonder if this is going to let me. Yeah, might as well. I would have to do this next week anyway. So since I'm already... but actually, I don't need to roll. I'm not going to hold on to this leveraged position past January anyway. So this is actually overkill. I'm overpaying here. If I'm going to exit this position by January, February, March, I'll probably if I want to push the taxes to the next tax year, I got to hold it until January. So March is kind of pushing it. Yeah, so I might need to do June. But actually, April and May might become available later. So let's just do March for now. If I want to roll March out to April or May, I can do that at a later time. So just going for whole numbers, I can go to the 300 strike. That's going to give me well over the 1,300 that I need. And so I'm just going to, let's just see if we can get a fill here. Yep. Now, what I failed to calculate is I have to make this a safe trade. So this new call that I bought, where the hell is it? Where's my 300? Okay. So my 300 strike call is worth 163. That means to get into a safe zone of selling a covered call, I need to be like, I need to go to the 460 strike. That's going to get me in the ballpark. Selling above that is safe, but I can also take that 460 and subtract the premium that I'm collecting. So let's roll out this $8.15 to August 22nd. And I needed to go to, I was looking at the 450, right? So the 450 collecting 22 makes this reasonable. But I could actually, I think I can go to the 460 because I collected 1900. Yeah, let's do that. All right, so let's recap. It cost me like, what was it, $1,500 to roll the short call. So I took 1900 in profits, rolling up my 250 strike long up to 300, and I got the benefit of being able to roll it out to March. And I think I even ended up, I ended up with an extra few $100 of buying power. So now I have $1,000 of buying power that I can use to do something with. It seems weird to buy long calls on a green day and kind of overpay. So maybe I will take this opportunity, not TLSA, Tesla. I think Tesla's still in the dumps. So this might be a nice opportunity to, holy shit, Tesla's down 20% for the year. Yeah, so let's take a little bit of those profits and go, I think December. That's only 160 days of expiration, but the calls are pretty cheap, $100. But let's just say I go out to January. That gets me to 189. Kind of like that as a sweet spot. Oh, yeah. Let's buy. Let's just dip a toe. I'll buy one. Actually, you know what? This is, if I try to get a leaps, then I might be able to work this. Wow, September 2026. I'm not going to be able to afford this. No. Yeah, I was going to try to swing it and see if I could get a leaps and push this to long-term cap gains taxes, but it ain't working. All right, so I'll just pick one of these up. I think every dip in Tesla is a buy for the next, I don't know, 2 decades. It's got to fill. Okay. There's 25,000 open interest contracts, and they're going to haggle with me over like 1 penny on the bid-ask spread. Thank you. All right, that's only going to leave me like, what, 800 bucks to play with? I could grab another Strive put or something. What the hell? Well, let's make sure this is still a good deal. I got to put up $500 in collateral. I can collect $85 in premium. And if I sell this once a month, let's just see what, if the price of Strive holds steady in 1 month, the $5 put should be selling for $13. So 85 minus 13 is 72. I would be pocketing 72 bucks for 4 weeks of my trouble, which would be 18 bucks a week on a $500 of collateral. That's a little bit more than 3% returns per week. Is that right? 72 divided by 4. Yeah, it's 18. 18 bucks a week, $500 of collateral. That's a little over 3% a week. So this makes sense. Hopefully I'll get filled at the mark price. I discussed liquidity the other day, and one of the things that I did fail to mention, I like tight bid-ask spreads, but the other annoying tickers only sell in increments of a nickel. So if you think you're getting filled at 88, you are mistaken. You're going to have to go down to the 85. So if the mark price is halfway between nickels, you're going to get screwed on the bid-ask spread, at least, two, three bucks. On an $88 contract, $85 contract, that's not the end of the world. But there were some cheap mining stocks that I used to trade. I think Iron trades in pennies now, but at first they were kind of annoying. I haven't looked at them in a while. What are they paying? Maybe I should have done Iron. Oh, Iron's up. Iron's doing well. I mean, they were trading. Oh, shit. They were trading down here at Riot and CLSK levels. So they've pumped like a mofo just in the last month. Interesting. Let's just take a look at them real quick. They also offer weeklies, which I like. Decent volume and open interest. Tons of bids. So yeah, so this is why I stopped trading them. This is, the bid-ask spread is kind of unfavorable, kind of like the Hut situation that I ran into. So this is 13 cents wide, and the option is only worth 80. So that's like over 10% of the option's value. Like the bid-ask spread represents over 10% of the option's value. So this is kind of a pain in the ass. Now, with that being said, putting up $1,650 as collateral, 1% of that would be $1,650, and this is like 5% in a week. It doesn't mean that Iron can't drop down to $12 and you're upside down, on your cost basis. But this is pretty ridiculous. This is pretty ridiculous premium here. Why the hell did I start talking about that? Oh yeah, did I use all my buying power? That's the point. So yeah, now I got $466 worth of buying power. So can't really do much with that. So I'll probably just, well, yeah, I'll just save it for to pay for rolls and whatnot. So thanks for the question. It's something that I've been I was thinking about covering anyway. So that was right on time. Thanks, Keith. What's up, Onan? Good morning. What point do you pull the plug on covered calls and buy longs, if ever? I recall you having that mental wrestling match with yourself late last summer before the big rep up into November. So I'm basically calling for at least through the end of 2025 is the bull cycle, Bitcoin cycle. It could end, whatever we're at right now could be the top, right? There's no guarantee that 117, 119, whatever we hit is not the top. That it could be it. It could be over. But I'm basically betting that the bull cycle is at least not over with until the end of 2025. Maybe we get some nice extension we're going to get an extended bull market into 2026. But I'm just guessing that Bitcoin shits the bed like it always does. And like just human psychology continues to do what it does. And so the only way that I've been able to outperform even though I've been limiting my upside with these covered calls, is because I've been plowing. This was the intro song, by the way. Bitcoins from Heaven by, what's this chick's name? Gracie Terzian. Well, let me get signed in again. So the only reason that I've been able to outperform, if I had just sold covered calls, right, 1,500 shares, and if I had 15 covered calls, I would have underperformed, right? Just taking the cash and doing nothing with it, I would have underperformed. The only way that I've been able to outperform is that my conviction that the number is still going up was correct. And so I took all of my short profits and bought long calls with it. Now, the funny thing is, I can't even find a long call in this account that's profitable. My December 1080s are down 30%. My December 530s, which were way up at one point, are down 10%. My January 890s, which I bought like at the fucking top, are down 90% plus, whatever. But the Septembers are no longer here, but those all printed. So all of the September 1080s, I believe I sold for a profit when I rolled them into Decembers. So there are some profitable positions on the tongue twister that, they're in the trade history, but they're still no longer visible because I rolled the Septembers in June out to December. But, there's, all these poor man's covered calls. I had probably a half dozen of them at one point. All of those printed. I've got one remaining poor man's covered call. This one's up over $3,000 on the long, but it's down $2,000 on the short. So it's, and that's how you know that you've constructed your poor man's covered call correctly, is that when your short strike goes in the money and you're losing money on the short, if you're making more money on the long than you lost in the short, then you can pat yourself on the back and know that you structured your poor man's covered call correctly. If my covered call was worth $3,000, right? And I was $1,800 upside down on it. And my long call was up under $1,800, right? So if my long call was worth 210 or less, then I fucked up somewhere, right? If I had chosen like the 405 strike to sell, then that would have been bad news. That would have not have been constructed safely. So I've already forgot what the question was. At what point do you pull the plug on the covered calls and buy longs? I don't ever pull the plug on covered calls. If I'm bullish, I'll take the premiums that I collected and buy more shares. Or if I'm a super bullish, I'll buy more long calls. If selling covered calls and I think maybe we're headed into the bear market, then I might plow all of my premiums into a different asset, maybe Tesla, maybe Stride or Strife, or something that I think would be like a flight to safety in a bear market. No guarantees that there'll be a flight to safety. But something that has lower vol, I guess is the point. Or something that has uncorrelated upside to Bitcoin and strategy, something like a Tesla. There could be a bunch of other good companies out there. I'm not aware of them. It's hard enough to be an expert, and I'm not calling myself an expert in strategy, but a lot of the guys that I hang out with are, and it's damn hard to be an expert in a single equity, let alone 5, 10, 20, right? If you're trying to build a diversified portfolio of 25 stocks, good luck. Good luck being an expert in every single one of those. So when you see these guys go on TV and it's like, Market Minute or whatever, and they've got 60 seconds to talk about their top 5 stocks, top 10 stocks, like, give me a fucking break. I don't know who could be an expert in 20, 30, 40, 50 stocks, unless if you've been doing it for decades, you might be able to, and you've been following that company for that long. But are most companies even worth following for 2 decades to become an expert in them? Not many. So you'd just be wasting decades of your life following tickers that ain't worth a shit. So yeah, I'll never stop selling covered calls on my positions. There might be times when, if I've got 1,500 shares, maybe I only sell 5, or maybe I only sell 10, and I keep 500 of them uncapped. Or, I don't mind capping all of my shares as long as I have all of these long calls to protect me. But at the end of 2025, all of my long calls will be gone. All of the poor man's covered calls will be gone. And I'll just be selling covered calls against shares, and then either using the cash to have fun, pay the bills, or plowing those premiums into something like a Tesla. Sequence only has $3 strikes. Yeah, that's wild. They're going to have to fix the options chain. You think it would be a good time to touch the double leveraged ETFs? Oh my God, Solana, BitX, and MSTX. For me personally, it's never a good time. Like, if you're day trading that stuff, maybe, but that's not, those instruments are, well, MST, what was the other one? An MSTU, I assume. If this is Yeah, fucking Solana. Um, I'm joking, but you know, asking me to look at a Solana ticker might get you banned from the channel. We don't do shitcoins around here. But BitX, Bitcoin strategy. Now, I don't like any of these products just because there's sideways chop. I mean, if you can get lucky, right? Like if you got lucky here last week at 55 and then you can just jump on this quick profit, I suppose, you know, good on you. But I don't like any of the leveraged products. I'd rather create my own leverage with options, right? If I want 2x leverage, then I can easily just go out here, January. Yeah, I could buy like 5 of these. And I literally just pulled these out of my ass. There's no math or like research here. So I can go out 190 days. I can buy 5 of these for the price of 100 shares of strategy and give myself 5 times 60, so 300 delta. I can give myself 3x leverage by just buying my own calls. If I wanted 2x leverage, I could probably go down here maybe. 4 of these times 2, 4. Yeah. Anyway, that would be like 2.5x leverage. So I can customize whatever leverage I want just by selecting a strike that, depending on how many contracts, right? Like 3 contracts would give me pretty close to 200 delta, and I can get that for 3/4 of the price of 100 shares of strategy. So there's no secret sauce to these levered ETFs, right? They're just creating the 2x leverage with all of these freaking derivatives in the first place. Yeah, so for me, I'd rather just do it myself. What's up, Onan? Again, let's see. Doing that roll now means you overpay for remaining theta, though. Although with how things are moving, maybe that's still worth it before it runs away from you harder. Yeah. Since the question was asked, and I had basically done all the math, I was like, okay, it made more sense for me to just roll it now and get it over with. I was gonna have to roll that October 17th long call next week anyway. And if I didn't just go ahead and pay for this roll, I would have spent that money. I would have spent that buying power. So just to keep my sanity and make sure that I don't miss something, it made clerical sense to roll this now. Theta decay sense, it probably didn't. It didn't make sense because although I did roll it, I rolled it for a net credit if I include the long call, but yeah. So where's my history? Yeah, the short call roll cost me $1,000, right? So I kind of wasted the opportunity of collecting that theta and doing nothing, which is in general what I do. So I try not to panic roll, but this made like bookkeeping sense more than financial sense, I suppose. So now I'm good to go on this call. I don't know if I'll be able to afford to close this on the 7th when Strategy has earnings. So we'll see. I might have thrown some profits away by doing this, but it helped me keep my head on straight. And that's another thing that's kind of like the anti-diversification philosophy, is when I add too many positions, that's when I notice I'm making mistakes. Every once in a while, I'll scroll down and I'll be like, why do I have 100 shares of Riot? Like how many weeks have I had 100 shares of something and I don't even have a covered call against it? If there's too much shit in here to keep track of, those things need to be pruned down to a manageable level. And I feel like this account is starting to get there, right? I've got mining stocks, I got Strive, I got dumbass GameStop, I got more mining stocks, I've got Strategy Poor Man's Covered Call, I've got more mining stocks, I've got my MSTR longs, I've got the what didn't I make this a Poor Man's Covered Call? No. So so now I've got the speculative long call in Strive. I've got this Riot call that I was copy trading with some friends of mine. I added this Tesla position and I rolled out this. So there's just a lot to keep track of. And this is just the small account, right? This is just the 5K account challenge. For somebody who wants to do this on easy mode, right? They've got their regular job. They've got a career that they like, whatever you do. And you don't want this to be a headache, right? You can just trade a couple things, a couple positions, just stick to shares, maybe one Poor Man's Covered Call, something that doesn't have to be just babysat day after day after day. I've tried to do a couple of speed runs on Fridays just to show how quickly the account maintenance actually takes. And even with all of these positions, I could totally address this entire thing in 30 minutes once a week. And that's being very conservative. Doing the 45 days to expiration, you could literally just come in here every 2 to 3 weeks and ignore the account in between that. So I rolled in this account prematurely because I needed to roll that long call. But in all of these positions, I'm just going to do nothing. There's as you rightly pointed out, there's a bunch of theta to collect on these August 15th 430 strikes, even though they're like every other minute as I'm staring at this, it's going in the money, out of the money, in the money, out of the money. So there's tons of extrinsic value to collect. So I'm not going to do anything with most of these positions. It just made sense to do it in the moment on that other account. Short long construction, that's helpful. Given that, do you have a general delta range you target for the longs you buy with the premiums, or is that always it depends? Yeah, it's always going to depend. I've been a little bit too risky at sometimes. Like when I was buying the 300 strike long calls and then we were trading at 250, that sucked. So you want to kind of imagine, okay, if strategy craps 25% of its value down to 308, right? That 300 strike will barely be in the money. So like it's still holding on by a thread. It's going to get a little bit hard to trade. So even rolling up to this 300 strike is not a lock, right? We all think strategy is going to 1,000, but it can go to 275 before it goes to 1,000. There's no reason why Bitcoin can't bounce off of 125 and we'll be 88 gang again, right? All of that shit is on the table. Which is one reason why I never stopped selling the damn covered calls in the first place. But in general, most Poor Man's Covered Call sellers are pretty comfortable above 80 delta because that gives you some breathing room down to 70 delta. 70 delta is like the bare minimum that most covered call sellers like to work with. But if you're starting, if you're starting at 70, then the price of strategy only needs to go down like 10, 15%, and you're already freaking underwater on this thing. So 70 is bare minimum, but you can get yourself into trouble. 80 is like getting into the comfort zone, and if you drop down to 70, you're still in the game. But 90 is a little bit overkill for me, because there's no room for that long call to grow at that point. Diversification is for people who don't pay attention. Spread your bets when you can't study enough to have conviction. I would agree with that. Let's see, Fidelity is showing 4, 5, and 6 strikes for a sequence. Yeah, they probably had to open up the options chain, put some more strikes out there. 88K gang, 58K gang, 16K gang, 3,500 gang. Wow, that's some OG shit right there. I think... I'm trying to think the lowest I ever traded Bitcoin. It might have been 5K. I forget what year even that was. What's up, Kanal? Concentration for growth and diversification for preservation. And so your final comment kicked in after I ended the stream yesterday. You were talking about creating an S Corp and getting some favorable tax treatment by trading in your S Corp. And I don't know jack shit about those kind of taxes, so I couldn't comment on that. But yeah, it sounds like a winner. I mean, if tastytrade will let you... Are you already trading with your S Corp on another platform? Is that working out? I might have to do something similar. I've only ever had an LLC, but if I formed an S Corp, then I could create a tastytrade account under the business identification number. Is that how that works? That might be kind of cool. But that's just another set of taxes for me to do. I might be talking myself out of that again already. We got to talk about incorporating, my man. Yes, it's working out. Okay, I'm glad to hear that. My annual fee with TurboTax probably isn't going to cover the S Corp. I don't know. Maybe it will. All right, so that was a lot of talk, and I still haven't even checked the accounts. Yeah, I'm not doing anything with this. This is just grin and bear it, right? Like I'm stuck with this. I'm probably going to be stuck with it all the way until August 7th when we do earnings. And if we're still trading at current prices, this value will go down to about $1,000, maybe 1,500. So it'll be a lot cheaper. Now, if strategy's up to 450 by then I'm gonna have to. I'm either gonna have to suck it up and use margin to remove these to close these before earnings. Or maybe just close this poor man's covered call out and just take the 20 grand in profit. Still got, okay, so this put credit spreads is doing a little better today. But again, nothing to do but sit on my hands and wait for this to get down to maybe 20 days to expiration. Might be able to roll it for a credit at that point. I think I do have a little bit of buying power in this. It's hard for me to tell how much buying power I have because I can't tell how much is being held against these put credit spreads. I think about $1,500, and I've got $23.11 in buying power, so I might have $800 worth of buying power here, and I hate having cash. So maybe I should just like buy a share or something. One share. The hell did I just do? Account is set to closing only, and this order has an open leg. What does that even mean? I don't know. I might not have the buying power I thought I had in this one. Okay. But yeah, same predicament. I sold the 440s. Those haven't gone in the money yet, but they're worth twice what I sold them for. In the stock market, you either want to buy low, sell high, or in an option seller's perspective, you want to sell high and then buy low in the future. So everything is just mirror images. It's just bizarro world. So the bottom line is, if I buy this back now, that's the opposite of what I'm trying to do here. So nothing to do there. But again, I've got 9 1080s, and I've got the 2 poor man's covered calls, which are actually down still. That's unfortunate. But if I have to pay to roll these, I can peel off some Decembers. Not a problem. The covered call challenge account, I guess I'm kind of glad to see the 440s instead of those 425s like I have in a lot of the other accounts. So this is a little bit easier to manage. They're threatened, but these have not gone in the money just yet. Hopefully I just jinxed it and we go to 475. That would be cool. But again, if we get them in this account, I was struggling to get back to the 500 shares. And so when I rolled the Septembers out to December, I didn't end up with very many of these. So there's only about 90 delta worth of upside here. If I get absolutely demolished on these covered calls, these 11 1080s are not going to cover it. They're not going to be able to protect me from, if I have to roll 50 grand, these 1080s might be worth 10 of them is worth 7 grand right now. Maybe they'll be worth 15 or 20. That's just me ballparking it. So the other 20 or 30 would have to come from these poor man's covered calls, which is fine. But I didn't have enough cash, and I'm not allowing myself to use margin in this account. I don't think that would be fair to the covered call ETFs. So I would have liked for this to be a lot, like maybe like 20 of these bad boys, but I couldn't collect enough premiums to make it happen and still keep my 500 shares. So you do the best you can. And I started on the 5K account, and I think I didn't even look at everything. I looked at some stuff. So the Riot put is already rolled out to next week. I got the Strives. I got the GameStop covered call. I got CLSK and Riot puts out to 822. I believe these are the ones that I'm copy trading with my brother-in-law. I just rolled out this 460 along with the 300. So that's the poor man's covered call. Should I take any profits in this run up? I could take about 40% profits on one of these. Doesn't it just seem like this is a tease right here? Previous high was what, 111? 111? Yeah. I don't think I'm ready to I don't think I'm ready to shave off any of these positions just yet. More Strive, more Riot, more Tesla, blah, blah, blah. Yeah, there's nothing to do here. Nothing expiring today. All right, let's check the chats and call it. Not financial advice. Would you still put on December 1080s today as a lotto ticket? So the way to analyze that is, as you mentioned, I can't give the financial advice, but I can just tell you how I think about these things. Obviously, I would have liked the conviction of buying the 1080s when we were at, strategy was at 250, 275, 300, 325, 350. But now that we're like all-time highs, you know, you're putting yourself into a more difficult entry position by waiting for us to be at all-time highs in Bitcoin. But the December 1080s, let's just see. They cost $700. Let's calculate. And if you think that strategy will be at any of these strikes by any of these dates, and you'll have a green exit position, then it makes sense to buy them, even at 700. Like you could have bought them for 500 a week ago. But, you know, if strategy's at 750 by September, it kind of doesn't matter if you bought them for 500 or 700. It matters if we're at trading at 500, right? We can be up another $100 a share from here, and the December 1080s can still be losers in September, right? So if we get God candles, we'll be in the green. If we get a slow grind and strategy's going up $10 a week, but the damn option is decaying $15 a week, you're not gonna make money on this. So if you think that strategy will be at any of these numbers before the red kicks in, then it's, you know, buying 1080s is still viable. If you think that we are going to grind up slowly and you're just going to be stuck in the red the whole time, right? The 1080s, if you know, even if we get to 1,078 a share, if you hold them all the way to expiration, you still lost your whole $700. So, if you think you can find an exit position here in the green somewhere, you can go for it. Otherwise, no. So yes for green, red for no. Let's see. You may recall I did the same as you earlier this year and took a stab at June 1080s. So it goes. Yeah, and that's the thing. We weren't wrong about strategy. We were just wrong about the expiration date. So yeah, them's the breaks. All right, we're all caught up on the chats. Good stuff's happening. Bitcoin's doing Bitcoin things. We're going higher. All that shit. Thanks for tuning in. Be good, y'all.